Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
For the moment, the markets are opening very flat indeed. It's just about 5 points higher on the Nifty.
Demand supply of shares and the assured returns of about 18 to 20% profit growth quarter to quarter, I think will drive this market further and further up.
The benchmark indices higher by close to about 0.25%, recovered a bit from the lows, at least in the last 1 hour or so. The asset quality has been maintained, while the company has reported a profit growth of close to about 25% on a year-on-year basis.
The 10.4% margin number, and that really is higher than the street estimates of 9.6%.
Okay, it's looking better. 44 points on the Nifty. The index is at about 10,982.
The side, you've got something like an Allahabad Bank, Bank of India, many of these banks, even Corporation Bank for that matter, smart 7-8% gains coming in on a lot of these names.
The Wall Street perks up in trade. Nifty reclaims the 11,000 mark and the Sensex gains nearly 200 points. Oil and banking stocks lead the charge. Midcaps outperform after a major rout yesterday. The index surges over 2.3%.
Tepid crude oil prices take oil marketing companies and aviation stocks higher. HPCL, BPCL and IOC were all up between 2 and 6%. Jet Indigo and SpiceJet were also higher in trade today.
Softening bond yields push up bank stocks higher in trade. Nifty Bank Index gains over 1%. Federal and South Indian Bank rally in trade. PNB and Corporation Bank also surge after reports that the government will infuse fresh funds.
HindusInd Unilever company slides nearly 4% even after meeting expectations in the first quarter. This after select brokerages downgraded the stock, citing concerns on high valuations.
Ashok Leyland beats expectations in the first quarter. Revenues rise 47%. Margins see a healthy expansion. Stock rises 2% as investors shrug off concerns over the new axle load norms for trucks and trailers. Well, those were the top 5 headlines from the day's action on Dalal Street. Hello and welcome to Markets Today Talk Back. This is the show where we tell you all that you need to know about the 6 hours of hectic trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Hi Lata. In the first couple of hours it was looking like this big drop in oil prices isn't showing up enough in a substantive way, but it did show up, and how towards the close of trade. So pretty bullish close today. Joining us over the course of the show to answer your questions which you send our way will be Sanjeev Bhasin, on the fundamentals, and technical expert Mitesh Thakkar. Gentlemen, both of you, thanks very much for being with us here. But before we start the Q&A session and get to the stories, etc., let's quickly wrap out what happened in terms of trade. We woke up to good news. Big drop in oil prices. Lata.
Absolutely. And everyone knows that India is the best hedge for those who are bullish on oil prices. On a straight day, a hedge fund out of 100 rupees would, when oil prices are high, would put maybe 80 in oil and 20 in India. The moment oil prices dip, you take away 3 rupees and put it in India, because Indian shares are bound to rise and you will make up what you lose in crude. So we are the classic anti-crude trade, and that's what exactly happened today. Money rushed into India and traders were waiting for it, so you could see a lot of short positions getting cut, and it was exactly in those places. I mean, for measure, whatever we lost yesterday, we regained on the Sensex, on the Nifty and on the Midcaps. I think they fell about 2.6% and today they regained 2.3%. So we are back to square one, back to where we were on Friday. Bank stocks, oil stocks, these are the usual beneficiaries. Bank stocks rise because they hold bonds in their portfolio. Bond prices rise and bond yields fall when you feel inflation is going to fall. So that's exactly what played out today. Bond prices rose by about 50 paise or so. Bond yields fell by about 6 basis points or so. And you saw all the bank stocks rise, especially PSU bank stocks, which have a lot of bonds in their portfolio. And of course, oil companies and airlines. But I think the big story of the day was actually Federal Bank. There was no taking away from the fact that the Q1 numbers which were announced clearly heralded the fact that it is a game-changing quarter. All the bad news that were, habitually there in banking stocks up until now, increasing NPAs, increasing slippages into NPAs, all that stopped, and the slippages into NPAs of that bank halved compared to the quarter ago. And all this coming on the back of excellent loan growth. So Federal Bank was the hero of the day, and therefore banks that looked like Federal, South Indian Bank, for instance, or even ICICI Bank, it's also a corporate lending bank, the expectation, Axis Bank, the expectation is that the worst is over. So that, again, lent fresh wings to some of the banking rally.
Oh, absolutely. I mean, a lot of the
stocks, of course.
A lot of the stocks actually that I'm going to talk about, Lata, actually are banking stocks, and for good reason. So, what stood out in terms of sectors? PSU banks, energy, and metals. PSU banks, you explained the reason. Energies, oil, metals also rebounded a little bit. There was data from China, etc., which was interpreted in a decent way, in a good way. Oil marketing companies, HP, BP, IOC. So, we spoke with the HPCL management, and they themselves, unusual for the company management, but they actually went out and said that looking at all the factors out there which are developing, it looks like, at least on the supply side, there will be more supply of oil hitting the market. And unless demand picks up substantially, prices actually should not stay where they are. They should trend lower. Results reaction, you said. I mean, Ashok Leyland and Federal Bank. And Federal Bank dwarfed anything else which was happening out there. Even after the 20-year 20% rally today, the stock is still down 18% this year, 18% YTD. So, I mean, at this rate, it would cover up that shortfall pretty quickly. But this is based on results, so don't expect a sort of repeat when we come back tomorrow. But it had a sort of effect, signaling effect in other PSU banks names. So look at Bank of Baroda, along with the bond yield story, Corporation Bank. What is common between Federal and PSU banks is that both have been beaten down so much. I mean, huge compression. So any little bit of incremental positivity can bring about huge rebounds. And that's what we saw. PNB, Allahabad Bank, Bank of India, Syndicate Bank, Canara Bank, Allahabad Bank. So, I mean, long list of names which gained between 4 and 6, 7%. Weakness evident in HUL. Part of our headlines, Emphasis was weak. Magma FinCorp was weak. Large volumes, by the way, 2.5 million shares. SIS, large volumes again, was down about 5%. There was VMart, which was down about 5%. Venky's and DB Corp were some of the other stocks which actually ended the day sharply lower. Lata.
Yeah, well, I think PSU banks, we must remember, are 20% in terms of NPAs, and Federal is 3%. Yeah. So, in a way, yes, probably good times are ahead, but it could take a little time for the PSU banks to get out of the hole they are in. Today, clearly, there was a short covering rally for sure on the PSU banks as well. But let's straight away get to our guests and check out where first the Sensex and the Nifty head. The technical question to the technical expert. Mitesh, how would you trade? What would be your tomorrow trade on the Nifty?
Yeah. Good evening, Lata. I think, to be very honest, today morning, if you would have asked me, I was looking for an 80-point kind of an up move. I don't think so. But this has definitely taken us by a slightly positive surprise. The good thing is that the levels of around 10,900 held very nicely. So that should call for a retest of 11,070. And once that is crossed, 11,130, 150, which is the all-time high, should be challenged, possibly tested, and even crossed on the upside. So much will depend, I think, on the bank Nifty. That is also close with a lot of strength, with a couple of stocks, especially HDFC, etc., are showing strength on the upside. So the bank Nifty could head towards 27,450, 500. That is the all-time high for the bank Nifty. And once it crosses that, I think that momentum should spill over on over to Nifty. So broadly, trade with more of long bias and barring, I think, a couple of metal names, I think it's mostly long calls on the stock as well as indices.
Fair point. With that, let's go to the second headline now, and that is the crude prices. They recovered marginally towards the end of the day's trade, but still around that 72 figure. The fall of 4% overnight boosted the prospects of oil marketing companies and aviation stocks. Likes of HPBP and IOC were all up between 2 and 6%. On the airline front, Jet, Indigo, SpiceJet all ended the day in the green, as you can see, between 0.5% and 3%. And HPCL's MK Surana sounded pretty bearish on crude oil prices itself. Listen to what he's made of the situation.
My view is that once upon a time, some time back, which we were thinking that probably 80 is the norm and 80 plus is the norm. I would try to see it lower than that now. Lower crude prices definitely helps in terms of the fuel which we burn in our refinery. So to that extent helps the GRMs. So lower crude prices is always beneficial for the refining sector. As far as the marketing sector is concerned, a lower ultimate product price, international product price, gives a better leeway to the oil companies to ensure that we are able to align our domestic prices properly to the international domestic prices. And one of the sentiment which the market has, whether the oil companies will be able to pass on the whole of the price impact or not, those type of fears vanishes when the prices are on the lower side.
Okay, that is the management of HPCL. We've got a question. Sunil K is writing in from Kerala. He's written in with a question on BPCL, wants to invest 1 lakh rupees in shares of BPCL, wants to know if this is the right time to do it, to buy BPCL shares. Sanjeev, what would you tell him?
Yeah, so I would recommend buying, but buy it in a SIP fashion, make it spread it over the next 3 months. You would have got the average of crude, maybe retracing a bit, going back to 75 or something like that, and you would be able to get better prices. But definitely for me, HP, BP and IOC, they all three stand out. I would say 450 would be the target by the end of the year on BPCL. So buy on declines or make it a SIP, or buy it every month, every week, or however well you want to do it. But spread it over the next 90 days. You'll get a better bang for the buck.
Right. The third headline is something, of course, we definitely want Sanjeev's view on it. Banks. They were the top performers in trade today. Nifty Bank Index gained over 1% on falling bond yields. Amongst private banks, Federal Bank gained the most, 20% after it reported a strong set of first quarter numbers. South Indian Bank also gained over 7% in trade, just expecting that it will do as well as Federal Bank when the numbers come. We caught up with Shyam Srinivasan, Managing Director and CEO of Federal Bank, and here's what he had to say about the nuances of the quarter gone by.
Our credit growth has for now 9-10 quarters been north of 20%, most close to 24-25%. So if you see this run rate, and which is what we are minimally focusing on, it should naturally, as a consequence of a coincident, as in the incremental slippages over your incremental credit growth, the reduction will be visible. Now the degree of target, I don't want to put a number because our focus is on making sure the credit costs are on guidance. We had guided for 65 to 70 basis points of credit cost. That we are very confident of delivering in FY19, and going into 20 it should get better. But minimal, let's focus on 19 outcomes. We believe that guidance of 65 to 70 basis points will be what we'll deliver.
Okay, we got a question. Vivek Sharma is writing in and question on Federal Bank. He's been holding 30 shares of the company. His cost is 85 rupees a piece. He's a short-term investor, wants to know whether he should buy, whether he should hold or sell. I mean, from 75 to 85 in one shot today after results. Sanjeev, what would you tell him? Hold or sell?
Oh, definitely hold and add on declines. It's not just Federal Bank which did 20%. Even PNB from 73 hit 80. And that's telling you that, what the State Bank chairman said, that right back should be the order of the day coming in the next 3 quarters. You've got lower bond yields, you've got a stronger rupee, and you've got oil prices lower, which means the boogie of inflation may be slowly going to ebb lower. I would be relatively very sanguine on most of the PSU banks, and in the order of State Bank, Bank of Baroda, PNB, and definitely a Federal Bank on declines to be added to your portfolio.
All right. Thanks for that. Well, we are getting in news that IDBI Bank's board meeting is over. It may not be anything earth-shattering simply because IDBI Bank is being acted upon by its shareholders. It has personally very little to take decisions in the scheme of things. So it'll be just a routine recognition that the shareholder is likely to change and that fresh shares will be issued. Yes, that will be the job of the bank. It will have to print new shares and issue. Beyond that, we should not expect anything scintillating, but we will wait for that news. Speaking of banks, public sector banks like PNB and Corporation Bank also rallied today on reports suggesting fund infusion by the government to help them meet their regulatory capital requirements. The fund infusion, we were told, and this is a CNBC TV 18 scoop, is particularly intended for Punjab National Bank because that big bank will get into the Reserve Bank's prompt corrective action. That is a plan under which they will not be allowed to take risks and they will have a lot of restrictions. And the government doesn't want a big bank, the second largest public sector bank, to get into the PCA net, and therefore the expectation is that they will quickly bring in the money. At the moment, the total capital adequacy ratio is below 10% for Punjab National Bank. About 5,133 crore is expected. With that, the capital rises as well. Their NPAs are at 11.96%. It should be brought down to 5.96, under 6%, to stay out of the PCA net. How do they manage to do that? They're expecting their profits to rise. They're expecting the NPAs also to be cut because of the NCLT cases, which is expected to bring back about 17,000 crores of write-ins from the likes of Tata Steel and Vedanta, who buy up the stressed steel companies. That plus other rules like, tighter lending, not doing risky lending, risk-weighted lending going down, a freeze on recruitment, freeze on expenses, rationalizing branches, cutting down ATMs are all expected to be a recipe to bring down expenses, bring up profit, and of course, cut NPAs as well. That's what we heard. Well, we have to take a quick break. We are coming back, more questions and answers from our guests. Let's leave you with the opinion we got from Rob Subbaraman, the economist from Nomura, on the emerging markets scenario. We are back in a jiffy.
Got to really be very careful on Asia EM right now. I think the risk I see is, so far the most hit has been the twin deficit countries, the high yielders, India, Indonesia, Philippines. I think the risk is it starts to spread more to Northeast Asia next, especially as we get the monetary policy normalisation continuing to go through. I think the risk for Northeast Asia, it's different. It's more credit spreads start to widen, liquidity evaporates, and property markets correct.
Welcome back. You're still with us here on Markets Today Talkback. We've been answering your questions. Sanjeev Bhasin and Mitesh Thakkar have been helping us with that. We got through 3 of the top 5 headlines of the day. Here's the 4th one. It was a day of selling for the largest FMCG player, HUL. The stock lost close to 4% despite reporting an in-line set of numbers for its first quarter. This as brokerages downgraded the stock, citing concerns about high valuations. Mangalam is running us through what the brokerages are actually saying. Mangalam, over to you.
Well, Hindustan Unilever was the biggest loser on the Nifty today, despite reporting a result which was absolutely in line with what the analysts were factoring in. So that brings us to 2 big fears. The first one is the fact that the company said input costs as well as currency depreciation is something that they'll have to watch out for going forward. The second thing is that competitive intensity is going up. So in this scenario, holding on to the margin expansion and continuing with that is a big question that the analysts are asking. The second thing is that the company has grown in double digits for 3 quarters in a row in terms of volumes. Going forward beyond Q2 FY19, the favorable base that there was will now become heavy. So there are fears of volume growth tapering. On the back of that, and the fact that the stock is currently trading at nearly 52 times FY20 earnings, we saw downgrades come by from across the board. So a lot of the brokerages, the likes of Jefferies as well as Phillip Capital, Prabhudas Lilladher, Axis Cap, all of them reduced their rating on Hindustan Unilever, brought it down to hold, saying that while the results were absolutely in line and they are sanguine on the demand scenario as well as the growth of the sector, it is the valuations that makes them a little averse as far as Hindustan Unilever is concerned.
All right, we'll get to a question on Hindustan Unilever. Vikas Jain from Pune has written to us on Hindustan Unilever. He wants to buy 170 shares of Hindustan Unilever for the longer term. He wants to know the right time to enter the market. Well, I'm going to put this to both our experts. First, Mitesh, the stock fell today. Can one get a more attractive level to enter Hindustan Unilever, and should one take that opportunity?
Yeah, Lata, I think I believe so. One, I think today appears to be some kind of a short-term top being formed, and I think some kind of correction has started. While the longer-term charts still remain very healthy, and I think the stock will keep making higher highs. I think there could be some correction happening in the short term, and anything close to about 1600, 1560 zone would be an excellent buying opportunity. So maybe another 6-7% on the downside, the stock could correct in the coming few weeks, but I think that should be it.
Okay, Sanjeev, your thoughts? The gentleman wants to buy 170 shares. What should he do, and when should he buy, if he should buy at all?
So, see, I think like you pointed out, the best of the numbers may be behind. They are telling you the competitive, there will be a lot of competition. There could be input cost pressures. But lever has been one of the best performers. It is one of the 5 pillars of what has propelled the Nifty back to 11,000, along with Reliance, Maruti, TCS and HDFC Bank. And I think it will be it's going to be prime focus in all portfolios. My suggestion would be buy some of it, but buy some more of ITC. ITC is going to get more into the other variables of FMCG. It has cigarettes, it has hotels, it has paper, and ITC's valuations are now trading at half of what Hindustan Lever is. I would like to put some money in ITC. I think that can give you a 30% upside in the next 2 years.
Okay, fair enough. And with that, let's get to the fifth headline.
Absolutely. Ashok Leyland beat expectations in the first quarter. Revenues rose 47% and margins saw a healthy expansion. The stock rose over 2% as investors shrugged off concerns over new axle load norms for trucks and trailers. And that, remember, is confirmation of CNBC TV 18's Newsbreak. Let's listen in to the reactions which came in from Pradeep Singhal, National President of the All India Transporters Welfare Association.
We are trying to reach out to them because some newspaper have said that it will apply only to the new vehicles, but what I don't think that is kind of practical. There are 2 issues to the whole notification. One is that there is a more utilization of the same asset. So because of that, what will happen is that you have more supply than the demand. You're creating more supply, and because of that, the freight rate will come down.
Okay. The point is, the expectation is that immediately there could be a slight fall in demand and freight rates, but not everyone agreed. In any case, we've got a person asking questions on the stock. A. Rajendra, he's written to us with a question on Ashok Leyland, has been holding 200 shares of this company at 110 rupees, and he's been holding it for 1 year. He wants to know whether he should continue holding or whether he should sell, given the recent fall in that stock from 160 levels. Well, first to you, Sanjeev, what should he do?
So, Lata, I think the numbers were in line and the margins have pleasantly surprised on the upside. I'm not too familiar with the new norms and what the fallout would be, but I definitely think that maybe most of the weakness from 165 to 125 has played out. I would recommend a hold, I think if you do get back to that 150 levels, try and book at least 50% profit, and then think of, getting into a better auto name where I think the two-wheeler side, Bajaj Auto, could be a relative dark horse in the next 2 years.
Mitesh, what would you tell him? 128, 129 at close today.
See, particularly to Ashok Leyland, I think one, it's gone through good correction from highs of 165 and the longer term support's kicking around this 120 to 115 zone. So in that sense, I think this may not be the best price to sell. And on any trading rally to about 145, 150 could be good exit opportunity. My sense is that the stock will consolidate between this highs of 165 to about 120 for many more months to come by. I think the medium term chart is now showing a breather. So maybe in a few months the stock will not do much, so the upper end of the range should be used to exit.
Okay. Gentlemen, thank you very much for joining us and answering all those questions of our viewers. Well, before we wrap the show, the news is that the IDBI board has taken on board the LIC offer, the LIC interest in IDBI shares, and is going to seek the government's approval or the government's decision on this expression of interest from LIC. With that, we wrap up this edition of Markets Today. Thank you very much for watching.